In Chapter 5, we're going to talk a little bit about our cash control system and how our money works through our checking accounts. How a business uses cash. In accounting, money is referred to as cash. Most payments are therefore made by a check. Since there's lots of transactions, there's a great chance that errors may be made. And at the end of the chapter, we're going to talk a little bit about a debit card and those types of transactions also. As a safety measure, Delgado Web Service keeps its money in the bank. By using the bank, they'll have written evidence of all cash transactions. A check is a business form ordering a bank to pay cash from a bank account. A checking account is a bank account from which depositors can order payments, and you should be familiar with this. Most of you have a checking account. When you open an account, you have to fill out what's called a signature card. And you fill out the information, you sign it like you are going to sign your checks. Every person who has the authority to sign the cards must sign the signature card. So if you have a joint account with two people, they both have to sign it. And again, once you sign the signature card, this is how you should be endorsing your checks, and this is how you should be signing your checks. Sometimes, instead of using a signature card, there will be an electronic device that you will sign instead. A deposit slip is prepared each time checks or cash is placed into the bank account. The slips differ from bank to bank, but they all contain the same basic type of information. Checks are listed according to the bank routing number, and you can see our checks here. What's circled there is a routing number, how the checks get from the business to you and back to, or I should say, get to the business, from the business to your bank, and then eventually back to you. Depositing cash, you must fill out a deposit slip here. When a deposit is made, the bank gives the depositor a receipt, and this is verification is stamped on the deposit slip with the date, the amount, and the initials of the bank employee. If you look at this deposit slip here, right here, this is verification that the bank got your money. So when you deposit money, you are going to record it in a check on your check stub, on the next check stub. You will see that you write the balance brought forward. Since this is a new business, it has a zero balance. You will write the date of the deposit on the stub. You will write the amount of the deposit on the stub. You will calculate the subtotal. Cash receipts are journalized at the time the cash is received. Later, the cash receipts are deposited in the checking account. There is no journal entry needed when you deposit money because, again, it has already been recorded in your journal when you receive the cash. Endorsements. The owner of the check is a person that is identified in the pay to the order of. Ownership of the check can be transferred, and this is done on the back of the check. And you've probably had checks given to you for birthday gifts or whatever, and you had to transfer this ownership or cash the check. An endorsement is a signature or stamp on the back of the check transferring ownership. Federal regulations require that an endorsement may be confined to a limited area on the back of the check, and this is indicated probably on the top about fourth of the check that you have to sign. You sign it on the back of the check exactly as the person's name appears on the front of the check. For example, a check made payable to M.J. Delgado is endorsed on the back as M.J. Delgado. Immediately below that endorsement, Mr. Delgado would write his official signature, Michael Delgado. Ownership may be transferred several times, resulting in several endorsements. Each person that endorses the back of the check guarantees payment of the check. If the bank does not receive payment from the person who signed the check, each endorser is individually liable. So if you get a check, you endorse it and you give it to somebody else and they take it to the bank and it's no good, you are personally liable for that check that you have endorsed. Blank endorsement is an endorsement consisting of only the endorser's signature. It can be cashed by anyone. And it looks like this. Again, here's the back of the check, and you would just sign it with your name, and that's probably the one you've used the most often. A special endorsement is an endorsement indicating a new owner of the check, sometimes known as an endorsement in full. Only the person or business named in the special endorsement can cash, deposit, or further transfer the ownership. For example, here, you would, in a special endorsement, you would write paid to the order of, and whoever you are transferring that check to, and then you would sign your name. A restrictive endorsement is an endorsement restricting further transfer of a check's ownership. It limits the use of the check to whatever purpose is stated in the endorsement. For example, here, Michael Delgado only wants this check to be deposited into his own account. So he's going to write for deposit only to the account of Delgado Web Services, and then he will sign this. A lot of business will do this by running the checks through the cash register, or they will stamp the back. So if something happens to the check, it gets lost, somebody finds it, the only thing that can happen to this check is to be deposited into a certain account. Consecutive numbers are on the top of the check and the stub, and this provides an easy way to identify the checks. It keeps track of the checks to assure that none are lost or replaced or misplaced. And this is our objective evidence. It's a concept we have. A check stub is a business's record of each check written for a cash payment transaction. After the stub is prepared, the check is written. A post-dated check is a check written with a future date on it. And again, this is illegal unless it is okayed in advance. A completed check stub and check looks like this. The first thing you're going to do is you're going to write the amount of the check on the stub. You will write the date of the check on the stub. You will write to whom the check is to be paid for. You are going to record the purpose of the check. You will write the amount of the check on the stub. And note that this part here we filled in earlier when we made the deposit. And that there won't be money deposited on every check. It's just when it happens. And then you're going to calculate your new checking account balance and record the balance. Then you are going to go on and you are going to write out the check. So you're going to write the date the check is issued, to whom the check to be paid, write the amount in figures, and again you want to write this as close to the $sign as possible. You will write the amount in words, and a lot of times people will fill in this with a wavy line so that it cannot be altered. Write the purpose of the check, and then you will sign the check the same way that you signed your name on the signature card. Voided checks, sometimes banks refuse to accept altered checks. If you make a mistake on a check, a new one should be prepared. You must keep the old one with the mistake on, because in a business, all of your checks must be accounted for. You mark the check and the stub with the word void in large letters, and then you record it in your journal. So again, this is an example of recorded voided check, because remember, in our document number, we want the checks to all be accounted for. We're going to record the date, the word void in the account title column, write the check number in the document number of the voided check, place a check mark in our post reference, place a dash in the credit column. Okay, just as a little review, again, endorsing checks. Remember, this is our blank endorsement where we just have your signature. This is your special where you put paid to the order of somebody else with your signature. And then restrictive where you'd put for deposit only to the account of whatever account it is, and